Hey guys, Ben here. You guys may have seen my previous video on small cap stocks and how compared to large cap stocks you can achieve much greater returns, although they can offer much higher risk. Now, Warren Buffett stated a few years ago, if he was just managing $1 million and not the billions and billions of dollars he is managing, then he could easily achieve 50% returns. When asked how he could achieve that and how the average investor could achieve very high returns, he simply stated, invest into small cap companies in your circle of competence. So this could be to do with your industry or just areas which you've researched more than other people. So for you guys, I've actually done a heap load of research in this video and I'm going to reveal a unique stock which has the potential to 10x. Now, I've also got a really special announcement. So I've recently been contacted by a hedge fund based in New York, and they've asked me to do some contract work for them, basically researching individual small cap stocks to help them guys out. And this is one of the stocks I've been researching for them. So you guys are getting that hedge fund quality research and you're getting that for completely free. None of this hype, none of this BS. No other YouTuber is talking about this stock, and many of the small cap stocks I'm going to be discussing in the up and coming months. So if you guys appreciate this, all you have to do is give this video an early thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Why not join the investing family by hitting that subscribe button and turning that notification bell on? And if you guys want to get the in-depth research, and when I'm investing into these small cap companies, which nobody is talking about, not even the Wall Street analysts are covering these companies, then you should definitely check out the VIP membership group. That way, if I've researched a stock and I invest into it, you guys can invest into it at the same time before the stock runs up. So what you guys may have noticed is if you spot an exceptional company, you may have noticed it's probably at an exceptional price. And that's the thing with investing. You can't just follow the crowd all the time. You have to be an individual. You have to look for companies which nobody is talking about, and that is when you can get the exceptional deals. And then when the institutions and Jim Cramer and everybody else is talking about that stock and it's on mainstream media, mainstream news, then the stock will fly, but you will be completely protected because you invested into it when nobody else was talking about it. But like I mentioned previously, if you're interested in the VIP group, you also get to discuss with me and ask me personal questions about your own investing portfolio. In addition, you can access my entire six-figure investment portfolio. Now, a little disclaimer, as this is a small cap company, this is extremely high risk. So this is not financial advice like all my videos. This is just me doing a video on some of the research I've done on a company. It's not financial advice. It's not a recommendation to buy or sell a certain stock. If you want to know exactly what I'm buying and what I'm selling, that's what the VIP group's for. So this company is called LoopUp and is a London-based software company operating in the global conferencing services market. First thing I like about this company is it's a software as a service company, or a SaaS company with high margins. Second thing I like about this company is it's in the video conferencing space, or the unified communication space. In a similar industry to two other companies I've covered previously on this list, which includes 8x8, which ran up massively after I recommended that stock, and also Zoom, which also ran up massively. Now, I've just sat through an entire 2-hour conference call and it wasn't the funnest experience, but I'm doing this for you guys in order to help with the research for this company. And the company could be quite complicated when I try to explain it, so I'm just going to try and simplify it as much as possible. So basically, this company works with large corporations, which are called enterprises, and allows them to make voice calls via Microsoft Teams. So they provide reliability, quality, and security for voice calls over Microsoft Teams. So this is not some new startup. This company was founded back in 2003 by two Stanford graduates named Steve Flavel and Michael Hughes. So very switched on people, and the company IPO'd in 2016. So we have seen an acceleration in the adoption of digital technology since the global health crisis hit. Businesses and corporations all need to communicate with other members of their team and other teams in different parts of the world easily, reliably, and with quality. So the Microsoft Team platform, which is their target audience, grew exponentially during 2020. And as you can see here, it reached up to 75 million daily active users. So few enterprises, which are large businesses, have yet to expand into business telephony. So this is where these guys come in. So basically it allows people to make phone calls from their Microsoft Teams setup direct to other people no matter where they are in the world. So enterprises that use Microsoft Teams that have a method of doing this, what's called direct routing, there was only 10% of enterprises which used that in 2019. That is predicted to grow to 90% of these enterprises or large corporations by 2022. So that's a major increase expected over the next couple of years in the industry and for the solution that this company provides. An enterprise, let's say this example here. We've got lots of different offices all over the world. Let's say it's an international law firm. They have an office in, let's say, California, New York, London, Shanghai, all over the world. They want to communicate with the different offices using their telephone service through Microsoft Teams. Now, the IT system and the telephone system for each office in each country will be different. It will be complicated. There'll be lots of different things that need to happen. It'll be a very complex setup, and that's what enterprises have at the moment, this very complex communication setup for their IT network. Whereas LoopUp's solution basically merges all that together into a simple unified system. So they have their team collaboration and phone system both integrated into Microsoft Teams and global direct routing for voice over the cloud. So these guys offer a premium cloud communication solution for business critical external communications. So they offer a single trusted global vendor partner rather than having to go through lots of different people. And they offer differentiated voice quality, reliability and value and deep expertise for a secure and compliant transition. So let's say the company just wants to use Microsoft Teams calling plans because they do offer calling plans. That the Microsoft solution is aimed at small, medium-sized enterprises and it's only available in certain markets and there's not much support and the price is quite fixed. So the support thing is really big for Microsoft. You would know this for many large corporations. If you ever try to contact their support, they can be an absolute nightmare. Even Amazon, if you ever tried to contact their customer service, they're absolutely rubbish. And you'd think such a large company would have exceptional customer service, but it seems many of the smaller players actually can offer better service. So with regards to support, these guys offer 24/7 multilingual customer support, and that's just something you won't get at Microsoft. And as a little bit of a side note, I actually used to work on contract for Microsoft, and I used to do a lot of work for them and actually designing their offices and their IT infrastructure for their offices, and that was quite an interesting career. But what I noticed is they need to hire somebody local in order to manage that and handle that for them. They don't really know what's going on the local level. They tend to look at things from quite a macro, big picture view. And this is where a company like LoopUp is taking advantage. So they also have great redundancy, so that's basically different systems. So if one goes down, they'll have no reliability issues. So they have a leading 99.995% availability, which is great to see. So they have over 5,000 customers at the moment, including 20 of the world's top 100 law firms. So these are the type of companies which are using LoopUp at the moment. So they're a certified Microsoft partner, and their deep expertise is one of their competitive advantages. It's a very complex space, the IT space. So if you've got somebody there who's reliable and trustworthy and can actually make things work, then that can be a great opportunity for an investment. Okay, so now let's dive into those juicy financials. So this company has achieved 43% revenue growth for the first half of 2020 compared to the first half of 2019. 43% is incredible growth. Generally, I look for a growth stock as one which is growing between 15 and 20% per year. Admittedly, it is a lot easier to grow for smaller cap companies compared to large cap companies, but still, 43% is pretty good. And the EBITDA margin has increased 249%. So this is a high margin business as it's a software business. So usually when I mention a company has high growth, usually I follow that by saying the company has a high valuation. In this case, not so. So diving into the valuation here, we're here on Stockopedia. This is a platform I'm used to analyze stocks. If you wish to check it out, I've actually got an exclusive 25% off discount link, exclusive only for you guys, the viewers of Motivation to Invest. I'll leave that in the description below. With that being said, here's this valuation. So price to sales is just 0.89. So that's less than 1. So let's say a price to sales was 1. You're paying 1 times the company's sales. You're basically, the market cap of the company is the same as the company's sales. Price to book value, so that's actually less than 1, which means it's exceptional value also. So the valuation is spot on for this company. One little risk and one thing you'll have to be aware of with small cap companies is the numbers can sometimes be skewed and skewed very easily. So just a few $1 million here, a few $1 million there, and the prices and the valuations can change massively. But at the moment, looking at the figures, it's looking quite good. So the current ratio of the company, which is your short-term assets such as cash, compared with the short-term debt, that's those due within the next 12 months. We can see the current ratio is 1.65, so that's pretty good. Generally, I look for around 1.5 and 2, so it does fit my requirements there. Here's some real in-depth information I've got from the CFO from listening to their call. They have $8.2 million in cash with just $5.2 million of debt, so they have more cash than debt. And they are to receive an R&D tax credit for $1.3 million. So that's a research and development tax credit. So we could add that to the cash balance. Also, what I do like to see is management has skin in the game, so they own a large percentage of the company. So the management here, the founders of the company, we can see them two guys here. They have 4.7% of the company each. As you can see, because it's a small cap company, that ownership is only around £2 million each. So it's still small amounts of money compared to the companies I usually cover on this channel. But at least they own over 9% of the company together. Shows they have faith in the business. There's also another insider which I discovered recently for this company, and this one is really interesting. The ownership at 3.28%, Soros Fund Management. Now that name may sound familiar to you guys, and it should, because that is the investment firm of George Soros. So George Soros is a billionaire investor and trader, and he's one of the greatest legends of all time in the game. Generally, he tends to trade a lot of stocks, and he used to do a lot of currency arbitrage trading. He's a very unique investor compared to many of the others, such as Buffett. He's not as traditional in terms of his style compared to Buffett, but still a very smart individual, very interesting character. So he owns around 3% of the company. Now, I'm sure you guys are chomping at the bit and you can't wait to invest in this company. All sounds great so far. But before you go off and do that, give this video a big thumbs up. And also, we're going to discuss the most important part of this video, which is the risks. So diving into the share price here, first risk straight off the bat, the market cap for the company is just $45 million. That's an interesting thing to see, but as it's a small cap company, they can be extremely volatile. So looking at the 5-year price chart here, the company IPO'd in 2016, 2019, major increases. So it was up. So the company went up from 2016 to 2018, 245%. Then, this is the key part, it plummeted. So it plummeted by 86% down. So that shows you the type of volatility you have. So if you invested in here, you would have made 245%, but then you would have lost 86% of your money if you would have held it on to that point. So that would have been completely devastating for your account. And that's why you really need to have a small position size if you're investing into these penny stock small cap companies. Now, 2020, the company did see a major boost. If I break it down to the yearly chart here, 2020, the company did see a major boost, mainly due to the global pandemic. So everybody was locked down. Companies needed to accelerate their digital transformation. Share price increase 467%. Major run up, a lot of exuberance behind the stock, similar to what happened with Zoom and Ring Central and many others in this space. However, now, and this seems bad, but I'll discuss it in a minute, that then dropped down again by 65%. So if you didn't get out here, you would have lost a substantial amount there. And here we are by November, December 2020, it dropped down again. And today it's trading at around 83 pence per share. Today it's trading at around 83 pence per share. So it's still tiny company. One question which I asked myself is, what was this major decline caused by here? Doing a little bit more research, I may have found the reason for the decline. So George Soros, who I discussed earlier, according to his last reporting date, which was the 1st of July 2020, he decreased his position in the company, well, his investment firm did, by 33%. Now, he still owns around 3.28% of the company. But what was the reason for this increase? Now, I have a theory. I don't know if this is true, but my theory is not that there's anything fundamentally wrong with the company, because if there was, you would have just sold out the entire position. The position's only worth £1.5 million, which is peanuts compared to what Soros usually deals with. I think that was due to portfolio rebalancing, because I think the stock actually up by 400% in the summer of 2020. And I think then what Mr. Soros decided to do was do a bit of portfolio rebalancing, and I think that caused the stock to decline. I'm hoping it's just that and there's not anything else fundamental wrong with the business. So what other risks can I see with this company? Well, we've got competitors. We've got Zoom and we've got Microsoft's own calling platform. They can effectively take market share from this company. One way I think they can do this is the fact that they're so large and also the fact that their products are so simple and easy to communicate with. Like, I watched their entire 1.5 hour presentation. I have a background in electrical engineering and IT. I do understand the area, and still I had to listen to all that to really understand what the company does and how it's positioned in the market. But a company like Zoom, we know what it does straight away. Everyone uses Zoom. But Zoom doesn't have the ability to 10x due to the company's current size and valuation. So the other question that was on my mind is, can these guys scale? Do they have the sales team to push their product onto more and more corporations and let them understand the benefits of using their service? If you guys want to know if I'm investing into the stock, if I'm buying the stock, exactly my details, if I found out any more research about this company, how big is my position, if I did invest in the company, etc., check out the first link in the description below for the VIP membership group. I strongly urge you to check that out if you really want to level up your investing game and get some golden information. Anything of value is worth paying for. And I do believe the VIP group provides immense value, and it's only the price of a coffee. So with that being said, if you guys found some value in this video, big thumbs up to the support. And if you're new around here, you still haven't subscribed, feel free to join the community by subscribing to the channel. And with that being said, I'll see you guys in my next video. Have a tremendous day. I've got so much love for you guys continuing to support the channel. I hope you did find some value in this video. It's a little bit more complicated, a little bit more high risk than many other things I discuss on this channel. But if you guys like this stuff, please do comment below. Or I can just cover Apple, which everybody's talking about and everybody knows the price of. So I hope you guys do see the value, and I'll see you in my next video. Invest safe.